Hello and welcome to the latest London South East CEO interview. I'm Donald Leggett, and today I'm joined again by Maurice Healy, CEO of AIM-listed Glantus Holdings, and they are the Dublin-based global supplier of automated accounts payable software systems. Greetings, Maurice, and how are you today?
I'm very good, Donald. Good to see you again.
It's always a pleasure, Maurice. Now, let me kick off by asking you about Glantus Holdings. They're a leading provider of software as a service solutions. So how big would you estimate that SaaS market is today?
Well, the market in which we deploy our SaaS solutions is the accounts payable market for global organizations, and that's several billion and expanding and growing.
Even a smaller part of it is several billion.
Several billion, and it's growing. The last research we looked at, it was expected to go from about 2.7 billion to 3.5 billion over the next 4 years. So it's in that region that we are, and we are. That's the size of the market and the AP market, but we are pretty unique. We have developed this technology, this SaaS-based technology, that is disrupting that entire industry at the moment. Because up to now, so much of the work being done around recovery was done manually. And we developed this technology, and now our technology has 5 areas in it. We do recovery. We recover a lot of working capital for our companies, but we also do fraud detection, analytics, anomaly detection, and a lot of stuff is built into compliance now as well. So it's a unique set of features in a SaaS model, and I think that accounts for why we're getting such traction in the market at the moment.
So you're automating a previously manual function?
Yes, completely. And it's not only has it made it easier for accounts payable departments, it's made them more efficient, more effective, more innovative in many ways, but it's also driving more working capital for them because, well, the machines are doing it better than the humans, quite frankly, and they go deeper and broader. So it's been hugely successful. It's been welcomed by the AP departments of these large organizations. We were in an event in Portugal last week where we were demonstrating a lot of the new features. And again, it was just a fantastic reaction from the people there.
Okay, let's look a little bit backwards now. Full year results to the end of 2021. I think that's 31st December 2021. Talk me through the key metrics. What was happening in 2021?
Well, first of all, I think just on an overall basis, Donald, we did the IPO about a year ago, and we made certain commitments or promises or forecasts at that time, and we've delivered on all of them. I mean, our revenues are up 27%. Our margins have gone from 25% to 29%. The amount of data we're analyzing has increased to $1.6 trillion per annum that we're analyzing across the base. And we completed 2 earnings enhancing acquisitions during that period as well. So a really positive start to our time on the markets. Yeah, and we have delivered so far on everything.
Okay, and if we could look to, instead of looking backwards, let's take current trading. Is current trading, is it a bit tricky given all the different headwinds occurring in the world today? How are things looking at the moment?
So look, it's something you've got to keep an eye on all the time. But the first thing is, and we made this statement in issuing our results, current trading so far this year is in line with the board's expectations. The macroeconomics, can be a double-edged sword. For us at the moment, as the economy kind of tightens, interest rates going up, there is a greater need for more working capital. There's a greater need for efficiencies. There's a greater need to understand, particularly in accounts payable, your entire supplier ecosystem. So that brings us completely to the fore. There's much greater demand in that kind of an environment for our products. The flip side of that is if supply chains are broken, if purchasing goes way down, as a part of that. If spend goes down on a part of supply chain problems, that can be problematic. But so far, this year, we are trading in line. Our pipelines, in terms of sales pipelines, continue to grow, and we're really positive about the outturn for this year.
Okay, let's turn to your successful acquisitions. You made 2 acquisitions in that year, and that they've grown the headcount. But what else have those new acquisitions brought to the business?
Apart from growth and scale and all those things we wanted from them, and we've reinforced our position in the US alongside that as well. But
that's a really useful rollout strategy for the US, isn't it? Because you've told me previously that what you don't want to do is go in and do battle, but as Glantus unknown, whereas you've actually bought into a well-known brand in the States, and it's smoothing the way.
Absolutely. You're right. The last time I spoke to you, I said I don't like doing greenfield scenarios, going in, opening an office, hiring a load of staff, and not knowing, or at least how long it will take to actually get momentum into revenues. It's always been a part of our strategy to grow by acquisition and partnerships. And those 2 acquisitions, one was in the UK and one was in the States. They have given us a bigger market again, just on our existing base now, to sell the products that we have, and also to drive more efficiencies through our own organization. So it's given us the scale, but it's also, there's know-how in everything you buy. Some of these
you buy talent, you buy knowledge.
You're buying talent, you're buying knowledge. And if you take the UK one, they had a big local government and government contracts that we weren't really strong in. So we learned a lot about how these government departments operate, and therefore we can, pivot the products to suit that. And then in the US, their knowledge on duplicate payments that we took on helped us to develop our products, give more depth to our products. So they've been hugely important on several levels within the organization.
Okay, US, let's stick with the US. The States is a massive market for you. US clients are typically larger, and the scale of the opportunity there is greater. So talk me through how you see progress in the States in the next year or 2.
Yeah, I mean, let me start by saying, Donald, that from the point of view of the brand being known in the States, in terms of our market, in terms of the accounts payable market, our rebranding has been hugely successful. We are now seen as an important player in that market, so we're really pleased about that. The organic growth we can see now from the events and the establishment of the brand. We have more inbound activities, and we have a stronger pipeline than I think we ever had. Interestingly, as you say, the companies over there, they're so large. Anytime we're doing a presentation, you'll put up logos of companies and you tend to put the recognizable brands, but there are so many in the US. I mean, when I look at the sales guys and they'll produce a list of these are the opportunities, I wouldn't have heard of them. And then you look at the size of them, it's massive. So the US continues to be a major growth area for us, and we're really pleased with the progress we've made on the branding side of things.
Okay, sticking with that, it's your new product suite is called Data Shark, and it's all driven by your own IP. So why is that critical to you becoming the dominant accounts payable player? The fact that you actually own this automating software.
Yeah, well, I think it's important at several levels. I think from an investor perspective, owning our own IP, deciding the direction of it, is hugely important, so that we control all aspects of the product and how we want to pivot towards our customers and their needs. But also from a margin perspective, our gross margins are very high because it's all our own product, and having that IP, and we direct that IP back to Ireland, which also drives lower tax rates for us. So from an investor perspective, it adds huge value to the business, the fact that we control our own IP. From our customers' perspective, it gives them a real amount of comfort that we are in control and we can work with them in whatever various ways they need us to work with them, because we control the product.
You can tweak that IP and make it bespoke for the individual clients, presumably.
Yeah, I mean, we don't do a lot of that, I'll be honest with you, Donald.
It's not good business.
Yeah, exactly. I mean, we kind of sell the products as they are, but there are certain things, around the analytics where we can do certain things for the clients to give them exactly what they need, how they're looking at things. We can help them with the automation of portions of their business, which again will drive efficiencies and for them and make them a more effective organization. So I wouldn't like to think that it isn't so much ad hoc as customization, and we have the ability to customize the product for the particular uses of any customer.
My last question to you, Maurice, Newsflow. If you could summarize what you expect out of 2022 and give me some of those big milestones that you expect.
So I think there are, I'll always look at acquisitions. It's not the best time in the world, acquisitions, with our share price where it is at the moment, but we'll continue to look and assess acquisitions. And we have a pipeline that we're working through. The partnerships is proving to be an exciting space at the moment. We're looking at geographic growth. We've just signed a Canadian company and a South African company, and we have some big opportunities there that we'd hope to realize. Also, we're looking at how, when I was saying earlier, we have $1.6 trillion of spend that we analyzed. We have a non-executive director who was really strong in the fintech space. She has become an executive director and is heading up that whole area of how we will maximize that data and provide more enhanced services into our customers. And that's a really exciting area. And we're hoping to have news on that over the next few months as well. And then we've got a pipeline. So we expect to be announcing some big wins as well. So a lot of different areas there, but it's Glantus and nothing stays still for too long. So it's really exciting, and lots of opportunity going forward.
Okay, an exciting year in prospect. Maurice Healy, CEO at Glantus Holdings. Thank you so much for joining us. That was very concise and a lot in there. Thank you so much, Maurice.
Thanks.
Meanwhile, do check out the Glantus Holdings chat pages in London South East. You'll get free data on the company, and you can speak to your fellow travelers in Glantus, or you can Google London South East YouTube and subscribe, and then you receive alerts to interviews just like this one. As ever, thank you for watching, and please do stay safe.